Alright, welcome to today's awesome class. Welcome to today's class. Welcome to today's meeting. Do you know that you can actually place a trade or ask your broker to take a trade for you without you being there? Yes. Without you being there, your trade can be executed. Let's say you've been analyzing market, doing analysis, because most of the trades on the channel and the rest have been on instant execution. Most of them have been on instant execution. But right now, I will be teaching you how to take a trade or how to place a trade without you being there. How to ask your broker to take a trade for you, whether for a buy, a sell, whatever you are doing, because not everybody is chance. Some persons are working, some persons wouldn't be chance to be around at a particular time. So you can actually tell your broker, oh, I'm not going to be around at this particular time. Please take this trade for me. And some of us might be able to spot a particular trade, but waiting for the trade to get your direction will actually be a problem. You might not be around, you are occupied with so many things. But right now, you will be able to take your trades if whether you are around or you are not around. Right. So let's go. So if today is your first time joining this channel, do well to subscribe, share, comment. Also like, so that every other person share. By sharing, people will be able to capitalize and enjoy and make good use of these videos and be able to trade profitably. So what am I talking about today? I'm talking about nothing else but a topic known as pending order in the market. A topic known as pending order in the market. So I'm gonna be writing it on the on my chart here, so that we will be able to learn properly. So pending order. So pending order. That's what we'll be talking about today. Pending order. Now, under this pending order, there are two types. We have the stop orders. We have the stop orders. So I'm going to write them here. Stop orders. Number one, under the pending orders, we have the stop orders. Stop orders. Yes. And we also have the second one known as the limit order. The second one known as the limit order. The second one known as the limit order. So we have the limit order. Now, this is going to be explained properly to you right now. I'm going to make it very short, but explain it. Whether it's your first time joining, whether it's your first time hearing about pending order, you've not used pending order before, you've been using it. If it's your first time, whether it's not your first time, no matter what it is, I will explain it for you so that you will be able to use it from any part of the world, anywhere in the world. You will be able to trade without stress with your pending orders. Now, I'm going to be starting with the pending order. What is a pending order? As the name implies, pending. So, it's a trade you take. Let me not use that word, a trade you take, because it has not been executed. It's an order you set or you send to your broker telling them to trigger you in for either a buy or a sell at a particular price or at a particular zone. Probably you wish to buy at a particular demand zone, but market has not gotten there, but you believe that market will definitely get to that your demand zone, but you might not be around for the market to get to your demand zone. So what do? You set an order in the market, and that order is known as pending order. So any year, any day the market gets to that your demand zone, it will be executed for your buy. And that's how it is to when the market gets to your supply zone. When market gets to your supply zone and you set an order, please enter this market or short this market for me. When the market gets there, it will be executed. That's it for pending order. So that's what pending order is. An order I place above or below the prevailing market price, telling your broker to execute you or to trigger you in for either a buy or a sell. But the problem here is that there are two types. We have the stop orders and we have the limit orders. Now, I'm going to start with the stop order with a practical example here. as a result of these videos, I had to go creating a new account, so that everything I'm going to do here will be live, practical, in order for you to be able to understand. So stop orders, there are two types. Before I show you on the chart, look at the two types. What I have here, so we have the buy stop orders and we have the sell stop orders. I come again, we have the buy stop orders and we have the sell stop orders. Generally, what are stop orders? Stop orders are orders you place in favor of the trend. They are orders you place in favor of the trend. You see a market do what? Buying, 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 buying. Or a market is in an uptrend. What do you mean? What do I mean by a market is in an uptrend? You see a market making a low, a high, a higher low, a higher high, a higher low, a higher high, a higher low, a higher high, going to the up direction. So your intention, if you want to use a stop order, should be a buy stop order, so that by the time the market gets to their preferred price, it triggers you in for what? A buy. Not only in favor of the trend, it can also be in favor of the candlesticks. A candlestick can be moving up, provided the candlestick is going up and the order is being placed above. That's the type of order you place, a buy stop order, so that by the time the market gets there, it's going to trigger you in for a buy and continue. So what do I mean? This is a practical example of what I'm trying to show you. Now this is USD card. This is USD card. What is happening here? Oh my goodness, the market is pushing up, it's not pushing down. So in this type of market, you can actually use a stop order. Now let's say you're a trader, you're a professional trader, you've analyzed the market, and based on your own decision or based on the type of trader you are, you believe that this market, or you believe that the market, the candlestick will break above this zone here. That's it. And you believe that the market will continue the buy. That's your belief. You believe that the market will continue the buy, but you wish for the market to break above first before you buy. That's only when you buy. So when the market breaks above, you will be entering the market for a buy. So what do? And probably you might not be around. So what do? You now set an order in favor of the trend here. So what type of order are we now setting here? This is known as what? A pending order. A buy stop pending order in the forex market. So I'm going to be setting that right now. I'm going to be entering the market right now. So join me. If you are using the laptop or the cell phone, this is the easiest way to set your buy stop order in favor of the trend. So what do? I come here, I right click. I'm using the laptop. So what do I do here? I go to the price I wish to buy. Let's say I wish to buy here. I right click, I go to trading, then you can see buy stop. Now you also decide the lot size you wish to go in, or the lot size you wish to trade. I like entering the market with a standard lot. I can't remember when this lot size was actually changed, but I like entering the market with a standard lot. So I have to fix this back to one standard lot. So I come here, let's say since I want to buy the market at that particular place, so what do? I click on buy stop. You can see it has been applied, but that does not mean I'm in the market right now. So if the market, if the market doesn't get to that particular place, I won't be in profit, I won't be in loss. But when the market gets there, execute it, that's when my trade will now start to do what? To run. So that is it. So if this candlestick gets to this particular place, it will be triggered for a buy. And what do you expect? You still expect the market to continue buying. It is only when the market gets to that your buy stop and doesn't hit it and reverses for a sell, that's when you will not be in loss. But provided your analysis is right, you are placing the buy stop right, you will definitely be in profit. So what you want now is for the market to hit your buy stop order and continue the buy. So that is it for buy stop. Then the second group of the second person here, or the second number here, is known as the sell stop. Now the sell stop, where do you find the sell stop? The sell stop is used in a downtrending market, or whenever you see the candlesticks pushing down continuously. Whenever you see the candlesticks pushing down continuously without any restriction, you see the candlesticks pushing down continuously, you see candlesticks pushing down continuously. That is when you now use the sell stop, because you want to trade in favor of the trend. Since you want to trade in favor of the trend, you use your what? Your sell stop order. Your sell stop order. So I wish to get a good example right now. Okay, even though this is not my good example or what I wish to take, but generally this market is falling, it's moving down. Yes, but as a trader, you don't wish to sell this market here, because after analysis, you believe you want to wait for the market to break this zone. You are waiting for the market to break this zone until you go in for your sell. You are waiting for the market to actually break this zone before you go in for your sell. So if the market breaks this zone, getting to somewhere here, you can now go in for your sell. But the other bad part of it is that you might not be there when it will break the zone. So what do? You set an order in the market telling your broker to trigger you in for a sell when the market gets here. So what do you expect? When the market breaks here, going lower, you enter the market and you'll be triggered in for a sell in favor of the trend, in favor of the candlestick. You can see where the candlestick is going down. You can see it, the trend, the chart too going down. So that is what the sell stop is. It's as easy as that. So how do I do that? I right click here, I go to trading, then you can see one standard lot sell stop. You can see it. I can also, yes, one standard lot sell stop. So when the market gets to this place, breaking this your zone or whatever you call it, getting to this particular place, it's gonna trigger you in for a sell, and you go in profit. As simple as that. So now we now move to the second group of persons. This particular group of persons, they are very, very unique. They are very, very unique. This particular group, you have to be very careful and very conservative to be able to understand them. Now, remember your buy stop in favor of the trend, just like what I showed you here. Buy stop and sell stop in favor of the trend, market to hit you. It's mostly used during the breakout strategy. I believe the video will be dropping soon. During breakout strategy, as it breaks out, yes, you cannot take entry or go in for a buy. If it breaks out to the upside, it breaks out to the downside, it's actually a good one, if only you do your analysis. That's why we have these videos and the rest, for we to capitalize on it and make profit from them. We also have the second group of persons known as the limit orders. There are two types: the buy limit and the sell limit. The buy limit and the sell limit. Now, this particular type, you have to be very conservative to be able to use it. Now, I advise people to use limit orders in a trending market, because the market, if it's in a downtrend, what you use in a downtrend is a sell limit order, and what you use in an uptrend is a buy limit order. I come again. What you use in an uptrend is a buy limit order. What you use in a downtrend is a sell limit order. So this is the simplest way to use it, in order for we not to be confused. So this is the simplest way for we to use it. Look for a trending market to use a limit order. Like some of us, we've seen a market like this. Okay, let me open this chart. I don't really know. Okay, let me try using this. Let me use 1 hour. All right. So this market, looking at it, is trending upward. So let's say I'm a trend line trader and I'm using my trend line to trade. So what do? I draw my trend line. So it simply means I'm not going to trade, I'm not going to buy until the market comes to my trend line. So something like this, whenever it comes, whether it comes now or tomorrow or anytime, we are not after that. But whenever the market comes back to what? To my trend line, that's when I will now be thinking of buying the market. That's if I'm a trend line trader. And remember, market must always give you what? A confirmation for your buy in the market. So waiting for the market to come back to this place. You've drawn your trend line, yes, you've done your analysis. Just like what I just did now. I've drawn my trend line, I'm a trend line trader, I've drawn my trend line, waiting for the market to come back to this place before I enter the market for a buy. That is if I have time. But what about those of them that don't have time to trade? What about those of them that are working and the rest, you are busy doing other things? So how do you now trade it? How are you sure you're not going to miss this trade and miss this money, miss this buck here? So you use what? A pending order. So what type of order do you use here? What type of order? What type of pending order do you use in this particular place in such a way that the market will come fall back, then continue this direction? Let me make it simpler for you. So the market will fall back, fall to this particular place, so that the market, okay, let me make it simpler for you, for us. So in order for the market to come to this place and continue this direction, this type of order is known as a buy limit order. So let me quickly write it: buy limit order. Buy limit order. So you go to your insert, yes, so this is a buy limit order. A buy limit order. This is a buy limit order. So I quickly erase this. Buy limit order. Buy limit order. So it's as easy as that. Buy limit. You can now see how simple and sweet it is. Simple and sweet it is. So what does that mean? You can see it here. Buy limit. Just the way you're seeing it here. Use it in a trending, but to get your retracement point. The same thing you see here. The arrow coming here, getting to this place and going up, is seen same way here. You can see it. The arrow coming here and going back up. Buy limit order. That's how it is too. Let's get a market that is trending down, the direct opposite of the buy limit order. Let's get a market trending down. Which of them should I open right now? So okay, let me use this. So we go here. I draw my trend line. Depending on the strategy I'm using, not everybody is a trend line trader. Yes, but depending on the strategy I'm using. Now, sell limit in a downtrending market. Remember, if you draw your trend line, the market must always come up back to your trend line before you sell. You don't sell at a lower low. You only sell at a lower high. So the market, when the market makes a move, the market has to make a move like this, just like what it's doing now, coming back to the lower high before you now think of what? Doing what? Shorting the market. Before you now think of doing that. So something like this. Oh, yes. So this type of order you place here is known as what? A sell limit. So by the time the market comes back to this your trend line, even though you are there or you are not there, the market can do a U-turn, pick your trade and go for a short or go for a sell. Now these limit orders have flaws. What are the flaws that the limit orders have? The limit orders have flaws in the sense that now if you place the order, how are you sure that it's going to give a confirmation? So you don't care for the confirmation. All you're after is for you to come back to the trend line. But that's actually hard to do that. So you can draw your trend line, place a limit order. So we go do your sell limit, one standard lot. You can see it has been executed. This market that is coming back up, when it gets to this particular place, it will trigger you in for a sell automatically, unlike the instant execution. So this particular type, we call it the sell limit order. We call it the sell limit order. So we go the sell limit order. We call it the sell limit order. So you can see it, sell limit order. As simple as that. As simple as that. So the USD card we did, know the difference. You can as well go over the videos if you wish. The USD card, you can see the market is even close to our buy stop order. It's known as buy stop. This USD card, what we did here is known as buy stop in favor of the trend. In favor of the trend is known as buy stop. So what we did here is known as buy stop. Buy stop. So I'm going to write it right now. This is a buy stop order. Buy stop order. So the buy stop. While the USD CHF we did. The USD CHF. Okay, let's talk about the GBP USD. The GBP USD we did. The GBP USD we did. I'm trying to make it easier for us. The GBP USD we did. Yes, right. So the GBP USD, this is our 4-hour time frame. This what is sell stop. This is sell stop. This is sell stop. Sell stop. Sell stop. So it's as simple as that. It's as simple as that. For those of us that have been asking me, how do I create my live account? How do I create my live account? How do I create my live account? All you have to do is to check on the description below. Description, you will see how to create your live account. I wrote it, I think it's down there. How to create your live account. How to create your live account. And if you are joining the channel for the first time, do well to like, share, comment, and also send across, share to your friends, share to everyone, so that they will be able to understand pending order. So this is it for pending order. Do well to enjoy yourself. Do well. You can as well go over the video over and over and over and over again. It's as simple as that. So as a way of recap, we started by talking about pending order. And what is pending order? This is an order you place up above or below the prevalent market price, telling your broker to trigger you in. When you are not around, probably you will be busy or something. When you will not be around, you place the order. So we have the two types, stop orders and limit orders. Stop orders is used in the favor of the trend. In favor of the trend. If it's an uptrend, you only think of buying the market, you place it above, you place your zone or you place your order above, telling your broker to trigger you in when market gets there. While sell stop is placed below. Sell stop is placed below in favor of a downtrending market or in favor of a moving bearish candlestick. Limit orders is placed against, opposite to peak retracement. Better off, yes, it's better like that, to peak retracement, just the way we showed it on the chart. So do well to enjoy yourself. All right, thank you so much. Bye now.